So, our favorite airplane maker is back in the news with the FAA grounding all MD-11 flights after UPS and FedEx both voluntarily grounded the airplane after the Louisville crash. Well, for all those that don't know who made the MD-11, it's, if you guessed Boeing, yeah, Boeing made the MD-11. They actually bought the McDonald company back in 1990s, and however, they still own the problem right now. And this naturally becomes a question of what's going to happen to the stock, right? What's going to happen to UPS and what's going to happen to FedEx? Because all that's approximately 8 or 6% of UPS and FedEx's national fleet, and that's leading to the question during the busy holiday season, which they're normally ramping up their flights and their cargo capacity. Well, 8% of it just got cut. And how is that going to impact them directly on the market, the stock market, along with the holiday season, like companies like Amazon with their shipping services? Are they going to be impacted? We're going to be discussing the impact on the stock, right? So recently, after the Louisville Boeing stock has just been slamming down past the 200-day moving average, going to the weekly day moving average, sitting right around 200. It's also a psychological number. And the question is this going to be a good buying opportunity for Boeing that's had a storied past, right? Kevin O'Leary kind of talked about this company where this is going to have scandal after scandal after scandal after scandal. Now, if you're sick and tired of the Boeing scandals, throw down in the comment section below when you think this is all going to end. Not trying to make light of anything that has happened with the Louisville crash. My heart goes out to all the families. But I did want to cover some of the financial impacts as it has on the global markets because UPS, FedEx, and Boeing are massive companies, and it has implications on the people that own these stocks. Now, if you guys want to know more about the Louisville crash, I will link a video in the description below by Captain Steve. He did an amazing analysis. Go watch his channel. It's absolutely fantastic analysis on that to actually understand what was happening and kind of give you guys a little bit more depth of why the FAA grounded these airplanes, because now they're questioning their airworthiness due to the engine falling off. Again, more details in that video, link down in the description below, so check that one out. But this directly impacts Boeing because they're going to have to pay to solve this problem. Even though on the chart, this was a beautiful cup and handle forming right here, it puts into question, is this going to form? Is this going to complete? Now, if I was to be the risk on, risk off mentality type person, considering their stock hasn't fallen off a cliff after this notice was issued on Monday and today is Tuesday, means we may be in a buying opportunity on Boeing. I don't really like saying that, but it is what it is. I would like for them to get back above that 200 price target just because it is above the psychological number one. Number two, it's also the 200-day moving average, so I don't have to play this kangaroo. I don't mind holding Boeing through the kangaroo as it gets through the 50 and the 200-day moving average, but it is an interesting perspective of maybe buying this company at this point. If we look at Lex Algo just to see what it's saying, we're just seeing massive selling on the daily. I see the potential where you could get a rotation right here. RSI is just in that point where there is an opportunity to rotate here. Airplane pun not intended. And then we're on the weekly, a similar story, right? We're really more in the sell signal area. If it comes back down any lower below that 200-day weekly, really, which is sitting right now around that 188 number, I would get completely out of it. This is just going to be a long, arduous hold. However, if you're looking to maybe snipe that bottom where we're currently at now, that's another 2% versus another 4% to the downside. That's not necessarily where I want to be. Again, that's why I'm still saying that 200-day moving average crossing above it. That's when I'd be looking to buy Boeing. Now, particularly on the weekly, it could curl up and then you have a lot of room to run. You have this massive cup and handle that, again, would play out massively, right? That's just an absolute monster cup and handle that if we just measure it roughly there, you're looking at a $330 price tag for Boeing. Again, Boeing has not been at that point in a very, did I say very long time? That was after the China crash in 2019, and it has never recovered since. So having said that, this could be an interesting opportunity, but we're going to be also talking about other opportunities to buy companies, specifically UPS, because UPS is directly affected by this shutdown. And also, if we hop over to Lexalgo, we can see what's going on. this company has just been selling off left and right for months, right? Like this thing just cratered coming out of COVID, coming into the era, it kind of was a bubble company, right? So coming back down to that 83 evaluation shook out a lot of the craziness. However, I don't necessarily want to hold through all these levels that are basically getting piled on over here, right? 1, 2, 3, 4 resistance levels that I have to deal with holding this company as it goes back up. Will it be a company that I want to hold long term? Again, that brings the question of where's the 200 weekly moving average, and it's way up there. So to me, I'm like, okay, strike number 1, strike number 2, strike number 3. This is a company I wouldn't be holding now. And for all those that are holding this thing at like 130, 150, God forbid, freaking 200, yeah, at some point you just want to cut your losses because all this company is doing is forming lower lows. And if this news wasn't bad enough, right, with their entire fleet basically getting grounded and nothing really going for them, this is setting up to be pretty darn bad, right? This is not a company I would want to invest in. There's too much negative around it. And let's jump over to FedEx to see if they are any better because they also got affected by this massive news, let's say. So FedEx, again, this is where I'm already seeing, okay, there's something happening here. Latest post market kind of climbing out of here. So, okay, we're starting to see some more bullishness as we kind of zoom out. Well, okay, so we got peaks and troughs. This company trades essentially in a gigantic wedge right here. So the next year or two, this investment could be very, very fruitful, or it can be very, very painful. So we're already seeing between UPS and FedEx, FedEx is clearly the better investment long term. Just looking at the chart setup, you are risking a little bit kind of being in here. You're looking at 7% downside possibility. So let's jump over to Lux Algos to see what's going on. Well, let's see. We got a zone at FedEx $223. That would coincide with all these moving averages right here. So, okay, that's going to be your strong support. So that 7% is essentially the maximum downside. Well, what if we just keep going to about there? That's 17. So it's almost like a 2 to 1, 2.5 to 1 ratio trade, which is not pretty good, right? It's pretty well set up for what it is. It's going to take a little bit of time to get there. Again, it's going to be choppy, and FedEx does have movement patterns. Their earnings are coming up on Thursday, December 18th. So that could be a big catalyst, especially they're going to mention this in their guidance, because it is going to be a hamper for the holiday season, how this necessarily affects it. With the FAA grounding, FedEx was approximately 6%. UPS actually was 8%. So FedEx taking the less blunt of the reaction, but still setting up to be a pretty subpar move going into the holidays, where, again, we're looking to ramp things up. Again, Amazon, all of them kind of lease out to FedEx and UPS for the carrying capacity. So Amazon not necessarily going to be affected negatively. If we jump over to its stock, is just absolutely boomtown, baby, as the rest of the market is. If you guys wanted to know about what the market's going to be doing, make sure you guys check out the latest 2 videos that will be posted at the end of this video. But going back to FedEx, again, I like where it is. I would prefer maybe the rotation back around that 250 number. There's also a psychological number right now that's $4 lower than we're paying right here. But if you can snag it right at that 250 level, I would really be happy with it. It is going to be one of those kind of longer term holds. UPS, absolutely not. Would not hold that thing for a million years. Would I buy Amazon? Yes, I'd be buying Amazon, as it's going to break through 260 most likely this week, especially when all the bullish news about the government shutdown and all that, and we'll be discussing that more in depth. But if you guys wanted to know what levels we need to pay attention to for the market, the video is going to be linked right on the bottom left over here, along with the bands video here as well. Discord top left over here. And I thank you all so much for watching, and I'll see you in the next one.